Hey everyone. So today was a pretty bad day. I really did not trade well. I took significant losses as a result. My own fault, of course. So this is the first trade and the main trade. So I have a pattern that I look for. There's really 7 different patterns that I look for, and one of them I refer to as the opening flag, and that's when the price action out of the gate is choppy and mostly sideways, either drifting up, which is bearish, or drifting down, which is bullish. And it's usually a pretty reliable pattern. And that's what I thought was happening here. So you can see that we opened up and it went sideways. Here it came back up. And I thought this was an opening flag, which would have basically gone down and tested this low, which it did right here, and then it would have turned around and started its opening drive. And everything that I'm trying to do in trading is to capture the opening drive. And every stock has an opening drive, either up or down. But there's a preparation period where the stock is preparing for its opening drive. And sometimes that preparation period is only 10 or 15 minutes. Sometimes it's an hour or 2 hours, and you just never know. But the opening flag, I thought this was a bullish opening flag. And so I bought calls right here. This is where I started buying calls. And the bottom line is, so let me just zoom out here a little bit. So this type of price action here, this is controlled selling. This is not impulsive selling. And that is a bullish sign. So when you see controlled selling, it's going to turn around at some point, and you just never know when it is. And so I kept averaging down this whole way. And you can imagine I was trading zeros, zero DTE options. So I took really significant losses. What I should have looked at, and let me just zoom in here so that you can see what, because I have to learn from this. I've been caught with this before, and I have to learn from this. So right here, see these white dots? These white dots show fair value gaps. So this is a fair value gap between the high of this candle and the low of that candle, which is 2 candles earlier. And this one here, this dot, is just barely a fair value gap, but it actually is a fair value gap between the high of this candle and the low of that candle. So that shows displacement. Displacement is when there's an impulsive move taking place. Impulsive moves is what results in fair value gaps. So an opening flag should not have any fair value gaps. And that's what I have to look at, because if I would have seen that, and if I would have had the clarity of thought at that time to see that, then it was actually a perfect pattern, because this is the opening range, right? Opening range breakout, ORB, is very common. So it's a candle 1, 2, 3, 4, 5. So that's the first 5 minutes. And then what did it do? It chopped around and it came back up and it tested the opening print, which is another pattern that I look for regularly. It failed at the opening print, got below VWAP, and then never got back above it. So I should have known that and taken a short when it tested the opening print. And I should have done that having seen that there was fair value gaps, and I didn't do that. So that's a significant mistake. It means that I was dead wrong, literally on the wrong side of the market. I was bullish and the market was bearish. Now, it's hard to take a trade like this because, like I said, this is controlled selling. This is not impulsive selling, which means that it can turn around at any point and go in the other direction. So normally, come 7 o'clock, I'm on the West Coast, so 7 o'clock is 10 o'clock New York time. Come 7 o'clock, it usually turns around either at 7 or 7:30. Those are very common times for it to turn around. But instead, this thing just kept grinding down, and it went all the way down. I'm going to zoom out here a little bit because it went down below. See this red line? That's the low print of 2 days ago. This is yesterday's previous day low, and this is the low of 2 days ago. So it went down and it swept the liquidity underneath that print. And I saw it when it was happening. That's why I stayed in the trade. But when it goes down this far for this long, it takes a while for the market to just change direction. Sometimes it changes direction quickly, but a lot of times it has to think about it a little bit. And then what ended up happening, because here's the opening drive that I was looking for. Here's the opening drive that I was looking for right here. And this was more than enough to get me out at break even. And I would have made a profit for sure, maybe not a significant profit, but I would have made a profit if I waited for this. But what happened in the meantime, right here, this was a bear flag. This was an impulsive move down and a bear flag. And these blue dots appear every time the ADX is below 16, which shows consolidation in price. So this is an ADX flag. That's another one of the patterns that I look for. So when I saw this, I didn't take a short on the Q because I'd already liquidated. I got out right here. I got out on this candle. I took big losses. I'll show you the losses. But here on this flag, I thought, okay, it's going to go back down and test the lows. And so I took a trade on Oracle, and I'll show you that trade in a second, but it didn't complete. And when a pattern doesn't complete, like this is a 100% measured move that you're looking for. If it doesn't complete and it reverses, that means that the market itself is probably reversing as well, because patterns generally reach their targets. So again, I took the long trade and I got some of my money back on this rally, but then it failed and I got out right here. And then during this period, I took the Oracle trade, which was right here. And this was a beautiful ADX flag. Impulsive move down and then consolidation sideways, and it was ADX below 16. This had every reason to go lower, and it didn't. It failed to go lower. And that should have been my tell. That should have been my tell that the Qs were ready to rally. And that's exactly what they were. So, and like I said, this move right here would have been more than enough to get me out at a profit. So I missed it. I mean, I really played it wrong. So anyway, I want to also on this video, I want to share the best trades of the day. So I watch basically 12, 13 different major stocks. They're all the big names that you think of when you think about the stock market these days, the Mag 7 and a few others. And in every one of these videos, I'm going to review the best trades that took place, whether I got them or not. So Oracle, believe it or not, was one of the best trades, and it was here in the early morning. So look at this. So this, now keep in mind, up here, this label, that 21D is red, that 8D is red. That means that the 21-day exponential moving average is pointing down, and the 8-day exponential moving average is also pointing down. Meanwhile, the stock opened here, and what did it do? It went up. This is the 5-day moving average. This white line is the 5-day moving average. It went up and just crested slightly above the 5-day moving average, tested the previous day high. This green line is previous day high. Could not get above it. Failed, came back below the 5-day moving average, and started fighting with the VWAP. This was a perfect trade that I should have seen. I should have seen it. And I didn't see it until much later. So this was a short underneath the 5-day moving average, failure. It didn't get above previous day high. This is a classic reversal setup. And sure enough, at 7:01, this thing starts to collapse. It's in a downtrend, so you would expect it to make a lower low than yesterday. And this is the previous day low. The red line is the previous day low. So you would have expected it to go beyond this level, and sure enough, it did. And it went even below the previous day's low, and then it stalled out after that. Now, would I have held it the entire way down? I mean, I would have been scaling out. I probably would have kept at least a small position until this secondary low, but I don't know how I would have played it. I didn't play it, so that's the bottom line. But this was one of the best trades of the day, was Oracle to the downside. Now, what was one? And just so you know, this kind of completed its move at 7:26. So another great move today was NVIDIA. So check this out. So NVIDIA opened up below these two lows. So below yesterday's low and below Friday's low. Okay. So it swept all that liquidity. All the stops were swept because it opened down here. Now, what did it do? It came up and it formed, this is controlled price action drifting down. That's a bullish sign. It came up, made a higher high, and then it made a lower low. That's a broadening formation. That's a reversal pattern. So it came down, first higher high loses. The first higher high fails. This was the first higher high. It failed, made a lower low, roughly symmetrical. So this high was higher than the previous high, which is here, by about the same distance that this low was lower than that low. So, and this is very common. The market is incredibly, like symmetry is unbelievably important in the market. So this made a higher high, came down and made that lower low, broadening formation. And that was it. That's all she wrote. Came back up. It got above VWAP and drifted sideways. And right at what time did this start? So we're 726. So 726 is right here. So right there is when the Oracle trade finished. So Oracle reached its target right here. And then just a few minutes later, NVIDIA pops up, gets above VWAP and drifts sideways. And here's the opening drive. And look at this opening drive. This is a beautiful opening drive. It gets back above yesterday's low and goes all the way up, gets above these moving averages. That's the 5-day moving average, gets above the pivot. That's yesterday's close. The gray line is yesterday's close. And it went all the way up and crested above yesterday's high before it stalled out. So I mean, those are two incredible trades, and I missed both of them. So it's pretty frustrating. So let me show you what happened here. So here's the Oracle trade. Actually, the first one is the Google trade, or rather the Qs. I lost $5,181. So I took a huge loss. Now I made 6,000 yesterday, so it's okay, but I mean, it's really frustrating. So, and then the Oracle trade, I just lost $330. Again, the fact that that trade failed should have been a tell. I should have gotten back into the Qs for that opening drive. But anyway, that's how it played out. So I lost a total of $5,511. And that's a wrap. So hope you enjoy the videos, and we'll talk again tomorrow.